Japan used to be the cheapest source of funding, but that is changing now. With policy rates in Japan around 0.75% and the interest is increasing, borrowings are becoming expensive for the corporates and the households. Now, if the business wants to borrow money to buy any asset or for any capital expenditure, if the household wants to borrow money to buy anything, they'll have to pay good amount of interest on that. But this is a very good news for the savers as well, as now they'll be getting meaningful returns on their savings, which earlier they did not get as the interest rate used to be zero or maybe negative. Now, the issue with Japan is that they have a very high debt to GDP ratio of around 250% and they'll have to pay interest on their debt. So it has become very difficult for Japan to borrow money going forward. The yen is very weak right now. The government is doing the fiscal spending. But now in Japan the yield cost has have been going up. So the people of Japan or the investor of the Japan will be more interested in buying the Japanese bond instead of investing their money in the bonds in the other countries. Now, earlier, the investors of Japan used to buy the bonds that were issued by the other countries, but now they are more interested in buying the Japanese bond. So, what will really happen in the other countries is that the demand for those bonds will go down. As demand for those bonds will go down, the value will go down, and their yields will increase. As we all know, that there is an inverse relation between the yields of the bond and the value of the bond. Now, how this is affecting India? Let's talk about that. See, in India, the first thing is we need to see is the carry trade. So, what exactly is carry trade? When investors borrow money from the Japanese and they invest in the Indian stock market or the any other stock market, that is the carry trade, which is going to be affected by this because now the investors in the Indian market who used to borrow from the Japanese market will have to pay interest on their borrowings. So either they will repay their borrowings or they will not borrow more going forward. So obviously the small cap and the mid cap index will be affected by this in the short term. The other thing is, as seen in the other markets, the Japanese will not be more interested in buying the Indian bonds now because they will be more interested in buying the Japanese bond. The third thing is that all these things is going to put pressure on the on the Indian rupees, so the imports will become costlier, and this is one issue that India needs to look forward to. But with the strong yen, India will be able to import all these things to Japan at a very 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 good rate. So obviously there are some pros and cons to it, so let's see what really happens.